But we have a global voice who's an India expert as well. Joining us now, Arvind Sanger, Managing Partner at Geosphere Capital Management. Arvind, thank you very much for staying up for us. It's confusing. Every day you think it's gone on for 5 days, new highs, and therefore today there'll be a dip. The dip gets bought and the market sets another high. 7 consecutive days of fresh highs. Is it still a time to buy?
Well, I mean, I think nothing goes straight up. So I would take a little bit. I think that at this stage, you've had, such a great run of all the good news on the vaccine front. At this point, you could see some, concerns about COVID getting worse. You could see some concerns about, in the US, the stimulus package maybe not coming through that people were hoping for. You see more lockdowns everywhere in the world. You have Brexit, maybe a messy exit. So there's enough things that people can worry about. And as markets are wont to do, nothing ever goes straight up or straight down. In this case, straight up, and therefore profit taking we are going to see along the way. And I think, some sectors have seen some very, very unusual good news. For instance, the Indian steel sector. And you could have some of that good news get a little less good. So there could be excuses fundamentally that would cause some excuses for profit taking. But any of these sell-offs are going to be, I think, as long as liquidity is flowing from the Fed and from ECB, which I suspect could provide more clarity on that next week. As long as all of that is flowing, I think any sell-offs will be limited in their depth or the duration.
Arvind, hi, good morning. The problem is now in the Indian markets, it's hard to find value because anything and everything has run up. If there is a dip coming, however minor it may be, and one wants to jump in, what are the pockets of value that you find now?
Well, that's a tough one. I would say that value can be found maybe in some, domestic power, infra, some of these sectors that have been left for dead for a long time. I think, I've been mentioning real estate for a while from a long-term standpoint. That could be valuable. One could maybe choose, travel and leisure and entertainment, which are stocks which are still well below, in most cases, their pre-pandemic highs, where, again, if you're looking out a year plus and you see a full recovery after vaccine, there could be potential to get back. But, these are, I guess, in the traditional sense, over the near term, not values, but in terms of long term, they would be. And the reality is what's going to matter, and I think we talked about this the last time I was on your program, is what happens to interest rates in India, because interest rates globally are, close to zero, and therefore people are willing to pay, I guess, what would seem ridiculous in other environments, multiples. But with Indian inflation rising, are Indian interest rates going to stay as benign and therefore, Indian market valuations continue to levitate to greater heights. So I think that I'm a medium to long-term bull, but I'm a little bit cautious here. And we've taken a few profits off the table because things have run so much. So, from a short-term trading standpoint, I think risk reward is less attractive. But if you're a 2-3 year investor, I would definitely say any meaningful pullback is going to be a buying opportunity. And any meaningful pullback is also going to be limited. Remember what happened last month. Domestic funds saw major outflows. And so domestic investors have not believed this rally. It's been global investors who bought this rally. So I think a lot of domestic money is sitting on the sidelines, which is going to cause any pullback to be somewhat limited because people realize that they made a mistake and, the economic recovery is coming and therefore valuations may not get back to levels which might make people completely.
So there's plenty of money, says Arvind, waiting on the sidelines. By the way, that's an important story flashing on the screens. This is something that we reported yesterday. Our colleague Timsy had said this first yesterday itself, that she had picked up from her sources that there were searches conducted at several cement company offices. And today we have a statement coming in from Lafarge Holcim that indeed CCI officials, that's the Competition Commission of India, officials did visit and the companies are cooperating with this probe on alleged cartelization. Arvind, good morning. So I want to get down to the micros. Actually, this news that's come in. Now, we've seen this story before, right? I think it was 2012 or 11 when the whole cartelization bogey was played up. And the market kind of then moved on and just waited for things to happen because this will go to the appellate tribunal and there's a lot of back and forth. Otherwise, there was a tailwind of, improving housing numbers, etc. for cement. How do you look at the sector?
Well, the sector, whatever the reasons, and obviously we have no evidence any way, plus or minus, whatever the reasons, the cement prices have held up well through, previous down cycles. And obviously we are now in an up cycle where we are hopeful that government infrastructure spending will ramp up. Obviously, housing market, we're seeing signs again from a long slump, things emerging. And if all of that happens, then cement demand is certainly over the next few years going to ramp up. I don't think the capacity additions are that meaningful. Therefore, from a cyclical standpoint, the industry should see better days. But the reality is cement stocks never really sold off the way that some other cyclical sectors did. And therefore, the stocks are not cheap, but, this cartelization, assumption or the CCI study into it could cast some short-term cloud on it. But we think the fundamentals from a business standpoint should gradually improve.
Okay. Arvind, the other issue that could put a spoke in the wheel, as a Kotak report was pointing out this morning, is inflation. India's inflation is above 7%, meaningfully higher than peers. Will that be taken in the stride? We'll get one number for November, day after tomorrow, actually on Monday. Will this be a show spoiler at all, or people will take it in their stride?
I think in an improving economy, people will take it in their stride. But if the economy itself is slow to improve, again, if you're looking for reasons for profit taking, this is a concern because A, it ties RBI's hand in terms of more easing. B, it even raises the specter that RBI may actually have to be forced to tighten somewhat. And the reason that matters is, by removing that liquidity kind of help, it could somewhat impair the magnitude or the speed of the economic recovery. So I think it is something worth keeping an eye on because it has real-life economic implications. And obviously it has some impact on, cost increases for companies and consumers if they're saying higher prices, does that impair their buying power? But I think, overall, we think that this is one negative factor in an overall improving economy that may prevent it from, the market from going up too much. But I don't think it's going to kill the rally, but it certainly provides an excuse for profit taking because I do not believe that at the current relatively low levels of economic activity, this high in inflation is a good sign. If this inflation were occurring much further into economic recovery, it would be much easier to take in stride as a normal occurrence. And if RBI were raising rates into a rising, booming economy with inflation showing signs of coming up, it would be more of a normal cycle. And we'd say, okay, this is part of the economic recovery. But happening so early in the bounce back from the COVID lows is a little bit disconcerting.
Okay, coming back to the big investment calls for 2021, Arvind, we've seen a completely volatile move in a stock like Reliance, for example. It had a steep rise and then a steep fall, and now once again back on investors' radar. How are you reading into this one, and is this still a good time to be buying some of these marquee names?
Well, Reliance obviously is a bellwether, and it's become a much more, of a play on retail and online, less so the telecom side. Telecom side is important, but the whole online shift and whether it's retailing or entertainment online, as well as other data services online, and then obviously the retailing side. And I think it is a bellwether play on the online adoption in India, and obviously it's suffered a little bit because of some one-off concerns, and maybe it got too far ahead too fast. I still think that if there is a company to invest in playing on all of these broader themes, Reliance will always be in the mix of some of the companies that will benefit from that. So I think it's a bellwether, but it's not going to be, as is clear from the last couple of months, it's not going to be a one-company market. And if you go back, 4 or 5 months ago, Reliance was very much outpacing and leading the index higher. At this point, the rally has gotten much broader, so Reliance may participate in the next leg, but it's not going to be just like, the FANGs in the US are not the pace setters of this next leg of the rally. It is the cyclical laggards that I think are going to be more important in driving the next phase of the recovery and domestic consumption plays and what have you. So Reliance will participate, and it is a long-term winner, but I don't think it's the pace setter by itself as it was a few months ago.
Right now at 13,500, what do you have the courage to pick at all? What would be your themes?
Interesting question, and we're having a hard time. We're going after mid and small cap laggards, and they don't necessarily fall into one bucket or one sector, but it is much harder to find. We're trying to find some, emerging themes that haven't gotten as much attention. We're looking for some hoping for some pullbacks in some of these valuations as some of these stocks have run way ahead of fundamentals. And markets being what they are, there is never a one-way street, and we're hopeful we'll get chances. But what makes me nervous about how big that chance will be and how quick we have to grab it is the amount of money sitting on the sidelines in India, because of domestic investors, it seems like, have missed this rally. But domestic-facing, domestic infrastructure, domestic demand, and domestic laggards, even in the NBFC space or the and some of the bank space, those would be areas that we would look at.
Okay. All right, Arvind, good talking to you as always. Thank you very much for joining us on this show today. Well, on that note, we do have to take a break with the news that the SGX Nifty is pointing to a negative start, about 0.5% down. We'll take that break, come back and get down to the micros, get you our list of top 10 stocks to watch out for this morning.